No banks. How to buy a house with bad credit. So you're looking to qualify for a house and you can't do it. You keep getting declined by banks. Banks keep telling you that your credit score isn't high enough. The time it's going to take to increase your credit score will take a long time. Sometimes even years to do it before your credit score gets better. But you're looking to buy a house today. Maybe you have some cash saved that you can use as a deposit. You just need to get qualified for the financing. Now, here's the deal though. If you do not have cash saved for a deposit, at the end of this video, I'm going to give you the #1 tool in order to achieve that pain point, right? You're going to be able to achieve getting your down payment for any house you would like to buy if you stay to the end of the video. In this video, I'm going to give you the 3 best strategies you can use in order to achieve your first house. By the way, the single biggest reason why people can't buy real estate is not because of bad credit or even a down payment. It is a lack of purpose. It's a mindset shift. You have to understand that you can go out there and achieve this goal with understanding new ways of thinking about how you go about real estate. So be open to a mindset shift. If you want to tune in for more videos, lightly hit the subscribe button to get wonderful content just like this. Let's get to it. #1, the tried and proven method of seller financing. What is seller financing? It's when the seller of a house acts as a lender, providing the buyer with the necessary financing to purchase the property instead of a traditional bank. And what are traditional banks? Chase, Wells Fargo, TD Bank, and there's thousands of other banks out there. So ultimately, you're not going to the traditional bank to get your financing. You are having a conversation with the seller in order to get the financing you need to purchase the house. That's ultimately what it is. I met a guy at a closing. His name was Leo. I sold one of his houses for him, and one of the things he told me when I asked him the question, how did you get started in real estate? I mean, how were you able to get started with your financing, with your down payment? Because at the time, I didn't have the money for a down payment, so I was asking to see how he got started. And he told me here in Queens, he was able to talk to a guy who had a 2 6-family home. Now, this is an incredible deal, I must say. The guy had 2 6-family homes, and he literally allowed Leo to take ownership of the property and work out a 30-year seller financing with that seller. Now, that's an incredible deal. Now, I'm not saying you're going to get deals like that. Even when he told me that, I was highly surprised that he was able to do it. He says that the seller was an older guy and he had been ready to retire. These were his last 2 properties and he just wanted to quickly get rid of them. So that is true for you. Right now, I read an article the other day about a guy who spent $4.4 million on a multi-unit property and he was able to get seller financing for it. This strategy works not only for single-family homes or 4 units, but also for larger multi-unit properties, and it encompasses many different types of property, whether it's warehouses, land, construction deals, whatever the case may be, seller financing works. So how does seller financing work? Well, the question is, how do you organize the contract between the seller and the buyer? Ultimately, it's a promissory note, and the lawyer will draft this for you. But in this promissory note, it highlights the key financial terms between the buyer and the seller. In this promissory note, the things you should put in it is the purchase price, the down payment, the amount of the down payment, the current interest rate, and also the repayment schedule. These are the 4 main elements to drafting the promissory note, and also other terms will be in there too. Your lawyer will help you arrange the promissory note properly. Now, here's a little hack in order to go about achieving huge financial success using these promissory notes. Oftentimes, you can negotiate with the seller to get a lower interest rate than traditional interest rates that's on the market. For instance, let's say you go to a traditional bank. Right now, current interest rates are 6.5%, sometimes 7%, depending on your credit score. However, if you speak to the seller about seller financing and you give him an offer, let's say at 5.5%, which is 1% point lower than the traditional financing, which can save you thousands of dollars down the road. Or you can try to negotiate for 2% lower than traditional financing, or 3% lower than traditional financing. Now, not to say that the seller will say yes to these things, but it never hurts to ask, because if so, you're gonna save thousands, probably hundreds of thousands of dollars by doing this strategy. Also, with seller financing, it's a quicker close because you don't have to deal with a traditional bank. Sometimes it can take 2 months or 3 months, or sometimes up to 6 months, depending on the requirements that the bank like. But between you and the seller, only thing that you gotta do is do what you need to do in order to make sure that the property is sufficient for you. Now, it's always good to have an inspection done on the house. That's just real estate 101. Hire an inspector, see all the different issues that go along with the house, and then number 2, make sure you get an appraisal on the house, regardless if the seller is willing to give you the seller financing. Now, these 2 things are critically important to your success. Another key thing with getting seller financing is that the financing cost is a lot lower than a traditional bank. Sometimes you got to pay for a broker, a mortgage broker, and there's other type of paperwork that's involved. When you look at that HUD statement, when you're closing the house, you can save way more money going directly to the seller. The next question is, how do you structure the terms of the repayment schedule, right? Typically, I would say you want to try to negotiate for as many years as possible. Let's say 30 years, because the amount of monthly payments you're going to pay the seller is going to be low. Coupled with the amount of interest rate, coupled with a lower interest rate as well. Now, most cases, the seller will probably say no, he can't do 30 years. He may do 20 years. He may do 15. He may even do 5 years or 10 years. The thing is, I would accept the terms to get into the deal as long as you can make the monthly payments on it every single month. You have to be able to afford that. Now, here's the caveat though. The name of the game is to really prepare yourself to refinance on the loan maybe 5 years or 10 years down the road. By that time, you would have equity built up. Another thing to consider while this is happening is to focus on your credit score. You should be trying to get your credit score from wherever it's at right now to at least a 700 or close to 700, which can increase your chances of getting refinancing terms on the next deal. Now, another thing is you may not want to refinance at that time if the interest rate you're paying the seller is lower than what a traditional bank is offering you. Another thing you can consider is that once you have the seller financing in place, let's say for 10 years or 15 years, after 3, 4, 5 years, and your credit score increases, you can apply to get a HELOC loan, which is a home equity line of credit on the equity that's built into the house. So let's say you've been paying down on the mortgage for 5 years, you have equity built up. You can go to a bank and say, I have this amount of equity, I would like to take out a portion of that. Now, what do you do with this money once you have refinanced on the house, or you have an equity line of credit similar to a HELOC? The choice is yours. You can use this money to pay down the mortgage more so. So that'll help you reduce your overall cost from owning that home over 5 years or 10 years. Another thing you can do is use that money for a deposit on another house. That's if you want to go deeper into real estate and do real estate as a business, right? That could be your seed money if you get $20,000, $30,000 after you've refinanced on the house. It's similar to the Burr method, except you're doing it with seller financing. Number 2, you can use FHA financing if your credit score isn't horrible. I mean, look, FHA is a government-backed program that allows people that have lower credit scores to qualify for a loan. Now, the way this works is that if your credit score is at 500, FHA will allow you to put down 10%. So yes, you got to have some cash saved in order to qualify for that. However, if your credit score is at 580, then you can put down 3.5%. These are very simple things you could do and you can qualify for. I would go use FHA if your credit score isn't that bad. Number 3, look for a guarantor or a co-signer if your credit score is bad. Now, this will help you eliminate the first option of seller financing, because you can just go to a traditional bank, you can use the guarantor's credit score, and you can go out there and pretty much get any house you want to buy as long as your guarantor's credit is good. Now, what I would say though is that even still, I would still ask the owner of the house if they would consider seller financing. And the reason why is because you can negotiate for a lower interest rate. You can negotiate for even a lower down payment on the house. You can even negotiate for the closing time would be quicker. And you can save a lot of transactional costs by asking the seller if he's willing to do seller financing. It works. It can help you out. Now, with co-signing, the only issue is that if your credit is bad, then the co-signer may not want to help you out because your credit score is bad. So it's a caveat there. But I would go out there, maybe your wife or your husband, and you all are building towards something, or maybe you have trusted friends that you trust and that trust you, that can help you get to another place if their credit score is good. The bonus: how to get the down payment for a house you're looking to buy. Well, the first thing is to understand that you can borrow money from family and friends and see if they're willing to have the confidence in you that you will pay them back. First thing you could do: talk to all your family and friends about borrowing the money for the down payment for a house. Simple. The second thing you could do is to study the game of real estate. Study the idea of fixing and flipping homes. Study the idea of buying and holding homes. By understanding how this process works, you will recognize that you should go for homes that are 20% below market value. With that being said, you would get into the fix and flip aspect of real estate. You would buy a house below market value, renovate the house, a house that doesn't need much work, and then you would put the house back on the market and sell it. Now, with that being said though, you're going to have to study every single process of this business. Once you do that and you understand how it works, you want to create a business plan of this process, outlining how it's going to be done, how much profit the person that's investing their money into this business plan will make. Ultimately, you want to pay the person who's investing the money 25% while you get 75%. Or sometimes I've heard deals where it's 50-50. You're the operator and the person who's putting up the money gets 50% that way. Now, with that being said, you have to network aggressively with your business plan. You can network through Facebook, Instagram, LinkedIn. There's a bunch of other groups out there you can get into. Another thing is you have to go to a lot of meetups via Zoom or in-person events and explain to people what you're trying to do, build your connections up, and then over time you will get someone that trusts you, that you can partner with them in a way where you can ultimately get your down payment for a house and fix and flip a deal. And with the profits that you make from there, you can go out and continue to do the process all over. But on that note, this wraps it up. Here's how to get it done. Check out my other video right here to get more content just like this. I'll talk to you soon. Peace. Go big or go home.